Good morning, everybody. So let's go over that paper trade that was taken yesterday. And let's go over why I decided to take that position on a paper instead of taking it as a live example. So, first off, you're coming into a daily chart. We had this gap down, massive gap down. So, doing a top down analysis on a weekly chart, take this wick, consequent encroachment of that wick, extend that out. You look at a monthly chart, look at this wick, consequent encroachment again, which was traded back down into a weekly. We stayed above this weekly consequent encroachment level. So that with the idea of price leaving a massive gap down, I wanted to see price give me some sort of a retracement back inside of this gap, at least back up into 25% or consequent encroachment of this gap. So bias was a clear bullish move. Narrative is something that we will define on the lower time frame, and we'll talk about a couple of things there. So taking this idea and going over to US 100, looking at the 4 hour, you can see that we have this gap lower now denoted. Consequent encroachment level was here. I was aiming for consequent encroachment or a move higher into the range, even if it wanted to give me the 25% of this gap down lower. That was my idea coming into this. Moving down to a 1 hour, not much to see. Coming down into a 15-minute. So when I sat down, came into this, price action was very messy. As you can see, sideways, very messy. Not not a whole lot of clean price action that would really get me excited and anticipating a trade idea. So of course it's NFP week. We had final manufacturing PMI at 9:45 p.m. and at 10 a.m. we had PMI. So coming into this, my thoughts were okay, 8:30 probably isn't going to be doing much because we don't have anything volatile around that period of time. 9:30, price could do one of two things. I had one of two scenarios that I was looking for. Price is either going to open up at 9:30 and we were going to go right for a liquidity, okay? So 9:30 opening was going to hunt the liquidity. Scenario number 2 was 9:30 was going to open up and that was going to form the Judas swing. And then 9:45, 9:50 should be the macro that I would look to execute something on. And when volatility steps in at 10 a.m. for PMI, PMI should just go ahead and reach the liquidity. So that was my mindset going into this. So I did not look for anything at 8:30 and nothing much happened at 8:30. The only thing I noted on this 15-minute chart was the fact that we had a 15-minute low sitting here which we traded over here. Also took a note of this 15-minute. Well, that was an hourly fair value gap. See if I can go get it. This is a little bit messy now with price action. Let's zoom in a little bit. So there's that fair value gap on a 1 hour chart. We traded into that. So this was the underlying basis. Okay, we traded into this higher time frame PD array. If price holds this PD array, then I want to see bullish move higher. Getting back to that 15-minute, let's go ahead and expand this a little bit. Yeah, there we go. So price traded into this, took out this low. Okay, so stops were rated. So the liquidity is going to be above this old high. Okay, so right there, with that idea in mind, that forms narrative. We took out this liquidity, so the liquidity is going to be up here. By the way, just moving back up to a 4 hour, because we also had an order block here. Look at that order block real quick. Right there, this down close candle. Traded above that. So a move back into this down close candle would be an order block, and you would expect, if price wants to be bullish, prices then should give a reaction. As you can see, we traded off of that level quite a few times here before eventually trading lower and through that. So with this idea in mind of us taking out this low, trading into this 1 hour fair value gap, 4 hour fair value gap low, as well as the order block on the 4 hour, I want to see that hold, and I want to see us trade this high and this high. So that gives me narrative. So that confirms my bullish idea. So taking that idea, going into a 1 minute chart. Let's just do this. $9.30, that should be fine. So let's take this idea. So looking at a 1 minute, really messy price action, nothing clean, nothing that's real simple, real easy, one-sided to see. That's another thing. On the daily, the only reason that I was bullish was because of that gap lower. If we didn't have that gap lower, to me, that would have been a consolidation market profile. And then I would then be looking to trade intraday liquidity. So that would give us a hard time frame consolidation profile. So hence we had the gap that gave me that context that I want to see move back into this gap. And the narrative was price was holding at this 4 hour order block. We traded this 1 hour fair value gap that pushed price higher. We traded back into this. So I want to see a move higher. That was my initial thoughts. First off, let's look at 9:30 here. 9:30, okay. So we traded this 1 hour fair value gap, moved away. 8:50, nothing. But if you look at this structure here, this low high, lower low move in here, we look at that. And if we go in and we take a rectangle, low high, lower low, breaker block. We traded into a higher time frame PD array, which would be that 4 hour order block. See that? Notice how things come together. Okay, so I've got higher time frame confluence. I have a model. I also have a fair value gap sitting there. Okay, so this would be a unicorn model. So 911, okay, I see price is hitting it. Price ran higher. Okay, we're reaching higher. So these equal highs here would be a simple target. And then you would be holding for the 15-minute old high. Well, I saw that. Okay, and price action looking as messy like this. To me, that is okay, I don't like this. Price is really choppy, really messy. You could take the setup, and this setup has a lower probability because of lower probability conditions present in the price action. The level was already traded one time over here. So 930, we approach 930, we traded back down into this breaker block, fairly gap, 4-hour order block level, traded back down into that. Looked at this. I didn't like the fact that we already traded the level one time over here. I didn't like the fact that this was all droopy. Okay, time distortion, I didn't like that. I like to see price be clean, come back to my breaker block, and rally away. So I didn't like that, so I opted to not take the trade. Left it to run, 930. We came back one last time into breaker block, immediate rejection, and a move higher, which followed after the fact. I didn't like the price action, so I opted to not take that position since it was a lower probability trade. So price took out this 15-minute old high. Okay. Price also took out a, I just want to showcase this because I did have this on the chart. And after we traded, we had this 15-minute old high right there. Just want to note that on the chart as well. I'm going to get that noted on the chart. Okay, there we go. So that 15-minute old high, okay, price took that out. And we rallied. Okay, so that's a level that's taken off. Minor buy side liquidity, and buy side would be resting above this high. We took out that buy side liquidity. Okay, nothing major. So we had high, low, higher, high. We took out 15-minute old high. So we took out a higher time frame PD array. So that would be give you higher time frame confluence. High, low, higher, high, breaker block, extended through. We traded through this very impulsively. We had a fair value gap. So that would be a unicorn model where we have breaker block, fair value gap, extend that through. So I was looking at this idea and I said, all right, I'm looking for bullish moves higher. And that's all that I'm looking for. I'm not looking for a bearish move here. So I said, all right, if price trades below this, gives me a valid breaker block, which it did, then I'll go on paper and I'll execute the position on paper. So I watched price, waited for the macro, 950 macro, 950 stepped in. At first, we were trading over here. We took out these highs and we tapped this fair value gap. Okay, we tapped the fair value gap. Now listen closely because this is important. Okay, we tapped the fair value gap. We did not trade into the fair value gap. Okay, so I wanted to see price trade into the fair value gap before I was going to execute something. Yes, this would be valid. We traded into that breaker block. We tapped the fair value gap. You take that, then you would be incorporating, we have a breaker block, fair value gap. You can put the stop here, or you have this inversion, which you can put the stop there if you want to have 3 PD arrays. But you got breaker block, fair value gap, and this 15-minute old high, which adds up to 3. So there you go. That's a 15% risk on that. And if you were going to take profit on this one, it's going to have to be at least 22%, which would be, by the way, these lows, quite relative equal lows here. Okay, so that would be the obvious draw on liquidity. So that would be a potential scenario that you could take. I didn't like the fact that we tapped the low of that fair value gap, but did not trade into the fair value gap. More times than not, with my backtesting, I have seen that price taps into the fair value gap like this, or taps into the breaker block. And then price comes back and price trades into the level, and then price rallies lower. So I opted to wait. Okay, 957, still inside the macro. So price traded into the fair value gap / breaker block. When I saw that, I said, all right, there we go. That's what I want to see. I know I did not execute there, but that was something that I journaled. Once I saw that, and now we can move over to the, let's go ahead and pull up the execution on the paper thing. Let's connect the paper thing. There's the paper thing, paper account, trading journal. Where's it? Account history. There we go. There's all the trades that were taken on this thing since last year. I haven't reset this thing yet. So there we go. I think it's a total of 14 positions taken. This was yesterday. There you go. Adds up to $1,500. Paper money. Doesn't matter. When I trade this thing, I trade it as if it was a live account. Otherwise, you're wasting your time and you're not learning anything. Treat it as a live account, and I take positions in conditions that otherwise would be low probability for my live account. So I take them on the paper account to see how the trade would play out, how I would feel when I'm sitting in that position, how I would manage that trade. So that is it gives you the experience of being in the position. And that's how you learn. So there's the breaker block, fair value gap. Here's the execution. I took an entry right there. I stood it up one more time. I elected to take this entry right there. Then I want to take an entry down there. So I waited for price to see if it wants to. One last time. Just give me a higher price. Gave me a higher price, took the higher price. Stop was up here. I had a limit order sitting right there. It was good enough for me. It was about 12% right there. As you can see, ended up being a bit more, but that's fine. That was the trade idea executed and managed. Anyway, I got in really nice move, quick 2-minute move away. Bam, 10 o'clock PMI. So PMI did a we ended up with a scenario here where 930 was basically a Judas swing, and 945, 950, 1010 macro price came back into that level. Okay, so that would be the scenario where I said that 930 is going to be Judas swing, 950 to 1010 is probably where I'm going to get the entry, and then 10 o'clock is going to target the liquidity. So that ended up happening here. 950 got the entry, and 10 o'clock targeted the equal lows that were sitting in place. As simple as that. Didn't opt to take it on the live account because price was messy. I was looking for bullish ideas. I was not looking for bearish ideas. And this structure here Again, comes back to it. This was messy. This was just not clean enough for me to want to take that position on live funds. It's not worth risking the money on that when you can wait for a plus setup. By the way, this would be to me this would be a class B setup. I would say a class B because of the fact that number one, it's trading uh, against the narrative, against that retrace back into that gap, which I want to see. Okay, this is moving opposing direction to that. It's and secondly, really messy price action. Really messy price action here. So that's why I would class this as a class B setup. A class C setup would just be something that wouldn't have had it would be something like we had over here. 930. Right there. Okay, we had this massive consolidation going up higher, and we had the break block sitting there, and price tapped it multiple times. Yeah, it did give a displacement away here, came back into it again. It's just not clean enough for me to be nearly an A class setup. So I would just rate this as a C class because it's so messy. Very choppy, very messy. Just overall not a clean setup. So this is I would rate this as a B class. Only reason that it's not a C class setup is the fact that we took out that 15-minute old high. So we had a clear Judas swing. We had volatility below the breaker block. Price traded in, we had relative equal lows. So that was a clear target. So there's that idea broken down. And the reason why I opted to take it in a paper account and practice that position as if I was in the position and learn from the experience of it. As far as, excuse me, as far as price action, need to go back over to NQ here. Not the cleanest. Got into a 4 hour. Yeah, not clean at all here. We had a bit of a gap there, traded back down lower. This to me now would be trading inside of a consolidation here. We filled this gap. We filled in the gap, so gap is filled. We have a fair value gap sitting here. If price stays above that, could potentially give us move higher. If it closes, stays below that, could potentially give us a move lower. But there's nothing clean and clear in here that gives me a 100% or 70% direction of where I really want to see that thing. Well, now, maybe you guys will be able to see now. Sorry about that. Back to what I said. On the daily, we built this gap. It's sitting in a consolidation market at this time. There's no clear direction here, nothing here that I would really want to, give me a clear bullish or bearish scenario. On a 4 hour, we had a bit of a gap. See that? We had a bit of a gap there. Fair value gap here. Extend that out. If price stays above that, it's most likely going to be moving higher. If it closes, trades through that, and we're going to then probably see lower prices. So this is something that is just going to have to be traded as a session liquidity. Just going to be hunting for session liquidity, scalping this 1 hour fair value gap. So far, we're sitting above that, but nothing clear in here that would scream to me. Nothing clean in here. We're still sitting in this high to this lows range, sitting inside that range, or this high and this low, sitting in that range. So it's range, pretty much range bound. We only have 10 a.m. Jolt job openings, which that's not really anything major. So there's just not a lot of volatility here today to to push price around. Wednesday morning, that should be your you should be done by after AM session tomorrow. And tomorrow we got non-farm ADP employment change at 8:15. I don't expect much from that. PMI at 9:45, 10 a.m. PMI. So I think it would be more or less the same idea again, where I'm either it's going to be 9:30 is going to open up, and we're going to get price is going to go for liquidity at 9:30 because we have 8:15 ADP farm employment change, or price is going to open up at 9:30 and we're going to get a Judas swing, and 9:50 to 10:10 is where you're going to find a setup, and 10 a.m. is going to reach for the liquidity on that news embargo. So it's going to be either one or the other one that you would be looking for there. So that would be what I would be looking for. As far as dollar index, massive, massive move lower yesterday. We took out that daily old high, took out that, and price just moved lower back into its gap over here. Closed it in fully, closed it in all the way. Not really too much here to see, other than the fact that we had this order block. We traded into that order block. We moved away from that level. We get this wick and that wick, and if you take pull a see that you got a little gap there. Take the two wicks, you got that I fairly gap. Created the consequent encroachment of this, moved away into this new day opening gap. It will be. Mm. We do have this fair value gap down there. That old low of fair value gap down there. This low and that low, relative equal lows. We also have relative equal highs here. So that right there gives you the clear indication that this is a low probability market condition, because I can frame, but I can see price trading lower and I can see price trading higher. So when you really got to sit on your hands and just wait. We're inside of this 15-minute fair value gap on US 100. We're inside that. We took out this high just now. Nothing interesting here. Nothing interesting. We're sitting inside of a daily consolidation. It's gonna be session liquidity today. I just want to take a look at the seasonal tendencies for DXY for Feb. We want to see a rally initially, and then price starts going sideways. So we want to see a rally for at least a week or a week and a half. See a rally in dollar, and then see it go sideways. As far as NQ should be sideways. Sideways for a week week and a half to 2 weeks. And then we have a 5-year giving us lower prices. So on a short term, lower prices on a short term. So far, we seem to be respecting the sideways profile. So that's where we currently are at, and that is what we are going with. So hopefully you have found this one insightful. Until we speak again, good luck and be safe.